Devang Mehta is also joining us now from Spark Private Wealth. Devang, how are you looking at the markets? What are you recommending your clients?
Thanks, Ajay, for having me on the show. I think, yes, very clearly we are seeing that markets have again regained the bit of mojo which it sort of had lost during the March fall. And I think there were a lot of theories which were going around that this is the start of the next big correction, but that honestly was not the case. And we sort of were trying and sticking our neck out and saying that this is sort of a good opportunity. That a lot of last right from September to Feb, there has been corrections, but that has not lasted long. March correction was a bit deeper. April also we saw a bit of snippet of correction, but I think there is so much of liquidity waiting on the sidelines. The numbers season has also started. Look at any number. Look at even the guidance given by some of the managements, and also the updates, the regular business updates which start during the start of the quarter. I think mostly things seem to be hunky-dory. Look at the GST collections or macros, other macros, PMI data. My sense is that there is not going correction which is going to come. Is it the start of a pre-election rally? It seems so. Whether I think market is expecting political continuity and sort of policy continuity rather to go ahead. It seems like that. Plus El Nino getting transferred to La Nina, that's also talked about. Monsoon would be good. My sense is that there is not a larger correction which is right now waiting. But yes, it's now important to differentiate the man from the boy. So can't get along with anything and everything. You need to be a bit selective in sectors and businesses when you're buying.
Right. Okay. That's the take coming in on the market right now. In fact, we had actually no. Before that, let me highlight and keep our focus on earnings, because that's where you are seeing the the reactions coming in thick and fast. And Bajaj Finance is going to be a very important earnings set come tomorrow. So let me take it across to Snehi and find out what the ET Now poll is penciling in. Snehi?
Well, yes, a good set of numbers is expected this time around for Bajaj Finance, both on the top line and bottom line. Let's take a look on the consolidated basis. Net interest income is seen roughly at 8,077 crore rupees, which is up 29% on a year-on-year basis. PPOP also seen at 6,738 crore rupees, up 31.5% on a year-on-year basis. PAT is seen at 3,661 crore rupees versus 3,157 crore rupees this time last year, which is an uptick of 16%. And NIMs, however, slight bit of a contraction is expected on the NIMs front. They're being penciled in at 10.3% versus 10.5% on a year-on-year basis. When you look at asset quality, a sharp improvement is expected in return on assets, because that is being seen at 12.6% versus 4.9% sequentially. So big jump over there. However, return on equity is expected to see a slight bit of a dip at 19.6% versus 22%, and provisions are expected to go up by 4.5% sequentially as well. Now, in their Q4 update, the company has said that their FY24 AUM is expected to grow by 34% on a year-on-year basis. Deposit book also expected to grow by 35% on a year-on-year basis. Now, what can we expect largely from these numbers? NIM contraction is likely to continue. Provisions are expected to rise nominally. Cost to income ratio, however, is expected to remain steady. Credit costs are expected to decline nominally by 5 bips this time, and cost of borrowing, on the other hand, is expected to increase. Key monitorables now will be the growth trajectory going ahead, asset quality in its unsecured portfolio, RBI actions on EMI as well as the e-com cards, management succession and transition plans, and listing of the housing subsidiary. But overall, well, yes, a healthy set of numbers expected from Bajaj Finance for Q4.
All right. In fact, pull up the last 3-month chart. You would see that Bajaj Finance has rebounded very sharply. Bajaj Finance, Poonawalla Finance, pull up Ugrow Capital, last 3-month chart. You would see that the peak of pessimism. In fact, even IFL Finance from a 380 level, that was the lowest from the RBI glare levels, I would say. All these stocks have rebounded, and the Q4 updates have been good. So watch out for Bajaj Finance. Devang, you have an eye on some of these technology or tech-backed lenders. Do you like any of them?
Yes, I think yes, Bajaj Finance, of course, though a bit expensive, has been one of our favorite as such. We know that the valuations are a bit expensive, but honestly, out of 4 quarters, 3 quarters, Bajaj Finance does deliver, and there is always a scare in one of the quarters that it would sort of miss the target. And given the expensive valuations, there is hardly sort of any slippage if that occurs that makes the stock correct. But to be very fair, right now there are so many pockets of the market where the valuations were inexpensive, though they are also sort of getting expensive. But the capex part of the market, the discretionary consumption part of the market, credit growth related another ideas into wealth management or broking or EMC space, or typically even banks have not done well so far. The private banks have not come out of the sort of hibernation they were in the last 1 year. So yes, Bajaj Finance remains one of a good idea to sort of bet into, but there are so many pockets inside the financials as well as the if you just get into and sort of get into the NBFC universe as well. So yes, Bajaj Finance, Bajaj Finserv. In fact, Bajaj Finserv being a holding company for Bajaj Finance and also the insurance arms, be it general insurance, be it even life insurance, offers a lot of comfort to a lot of investors.
Okay, that's the take coming in on Bajaj Finserv as well as finance. Well, we had a very interesting discussion earlier today with Nilesh Shah from Envision Capital. And he talked about as to how he has a concentrated 25, 30 odd stocks kind of portfolio and very diverse within that. Here's what he actually likes and holds within his portfolio.
We've been owning KSB, which we've partly exited. We've been owning a TD Power. We've been owning Jash Engineering. So all different plays. I mean, somebody's a play on energy, somebody's a play on the water segment, somebody's a pump company with essentially opportunities in nuclear power. So we've been playing a whole basket out there, and then on and off we've been owning some of the defense companies as well. So I think we have been essentially having a fair share of the portfolio in that segment. We've been owning some of the autocom companies as well. What we have at least done is we've tweaked a bit and see, instead of owning just a handful of stocks or running a super concentrated portfolio or even a concentrated portfolio, we're running a slightly more diversified portfolio. We no longer are just owning 10 or 15 names, we're probably owning 25, 30, 35 names, okay? So as to make the most of the emerging opportunities, and that I think purely is a outcome of the broad-based economic growth. The tier 1 has surely disappointed, but one should not be too disappointed with them because they have grown and they are a services company. So to that extent, I think they have essentially played to their potential. But the tier 2 segment in IT services, I think they have been champions.
Very selectively, but they've
so many companies which have created products which have been focused on niche segments, they have, I think, been phenomenal.
And your favorite there is?
I would still think, I mean, in the past it used to be Tata Elxsi. That used to be a huge favorite. Obviously, because of valuations and all of that, we kind of exited. My current favorite, even from a potential point of view, is LTTS.
All right. So on the one hand, there's a lot of talk around the ingredients of baby food, etc., and then Nestle as a company is in the middle of it. But results season is also there. So what exactly to expect from this quarter? Vinny is here with more on that.
So yes, in terms of numbers that are expected from Nestle, it's the March ended quarter. Do not forget that this time they're changing from calendar year to financial year. So yes, we are keeping the March ended quarter in focus. Standalone numbers, what we look at, 7% growth, a decent growth in terms of overall the revenue of the company, profits of the company, a strong growth, a double-digit growth of 15% for Nestle, while margins expected to see a sharp improvement, 24.1% versus 22.7%. So yes, around more than 150 basis points in terms of improvement in terms of the EBITDA margins of the company. Volume growth expected at 3 to 4%. So let's keep an eye out on that. This high revenue growth is because of the distribution expansion that they've been focusing on. They're focusing on the rural strategy as well. So those initiatives they've taken over there is something that could work out well for overall Nestle's numbers. Now we're keeping an eye out on the chocolate as well as nutrition segment. That's expected to see a steady growth. International business likely to see a bit of a decline there. While obviously in terms of margins, keeping an eye out on that, YOY we're seeing an improvement. Sequentially, because we've seen those costs seeing an increase in, on a sequential basis, maybe we could see a reduction there. Now let's keep an eye out on raw material cost commentary. What are they seeing in terms of the pricing going forward? Other than that, commentary is going to be important in terms of the rural players. How is that shaping up? Rural versus urban and regional players is key to watch out for. And any special commentary on the baby food segment, you know, given that there were concerns around the sugar in the food content, that is something key to watch out for from Nestle.
Okay, that's the preview on Nestle right now. Devang, just wanted to understand what your tilt in the market is right now. We talked about your favorites, but is FMCG really part of that list? Because, you know, again, the concern still looms large on a meaningful or material rural recovery.
exactly. You sort of got it right that FMCG has sort of underperformed the entire market. If you look the last couple of years, be it HUL, be it Nestle, be it other businesses in the similar domain. Yes, there are certain exceptions which have done very well. But yes, to give a 60-65 type of a PE to a company whose volume growth probably goes 5-6%, there's no way saying that the franchise has created great wealth for investors over a period. A lot of these franchises have created a lot of wealth, but right now there are so many pockets in the market which can outperform this on a return basis for the next 2-3 years, and are also inexpensive in valuations. Yes, to answer your question, consumption, if I can bucket into two parts very clearly: one, the non-discretionary part, which is suffering right now because the rural recovery has not been as sharp. There is discretionary or upper end luxury consumption, which is where the money is right now going. There is a lot of smart allocation of money which has happened from this end to this end, not only on the stock prices, but also as India aspires more, as India sort of grows more, more disposable incomes are with people. The spending is huge. Look at the ARR for a company like EIH, a hotel company like EIH. 18,000 rupees is the ARR, right? So there is religious tourism, spiritual tourism, inbound. A lot of such tourism initiatives where hotels are expanding. The supply right now is probably at around 4-5% the rooms, and the demand is around say 10-11%. So this supply mismatch, demand supply mismatch, plus a lot of companies using their operating leverage, I think, and companies are also getting less and less debt. So they are reducing the debt burden as well. So I think this part of the market where people are graduating from cars to SUVs to even the luxury end of the consumption, that is where I think most of the money will be made. Companies like Titan, companies like Landmark Cars, just giving certain examples.
Premiumization trend is clearly going to continue, but what is it that we can expect from IndusInd Bank when it declares its numbers tomorrow? Gaurav is here with the poll.
Well, yes, IndusInd Bank will come up with the numbers tomorrow, and if you look at the numbers and the estimates, the net interest income is expected to increase almost by 7.5%. PPOP may increase almost by 9.7%, and a little bit of decline in the increase of PPOP could be because of the high cost of debt that we have seen for the bank. But apart from that, provisions are expected to decline, and that is the reason why we may see PAT to grow almost by 15.5% on a YY basis. Apart from that, banks' high yield segments and repayment of high cost borrowing can actually help the bank to offset the effect of higher cost of deposit, which may actually result into net interest margin remaining at stable at 4.3%. And apart from that, Street is not actually estimating any kind of risk in the asset quality. In fact, they are estimating credit cost to remain stable or rather decline a little in this quarter. If we look at the provisional data from the bank, we have already seen that advances grew almost by 18.3%. Deposits growth was at 14.4%. Now, this deposit growth was actually lower if we compare it with the other private sector banks. But in this quarter, we saw 2.7 crores of outflow from retail deposit because of the regulatory actions against a fintech partner for IndusInd Bank. And because of this deposit was at 14.4%. So, any kind of commentary coming up from bank on how the deposit growth will remain will be a key watchable. And apart from that, any kind of commentary on cost of funds, and if the loan growth, which we have seen at 18.3% already in this quarter on a YY basis, if that can sustain, and if any kind of commentary coming up from the management on that front is going to be important for IndusInd Bank from here on. So definitely watching out for how management talks about the commentary coming up on IndusInd Bank.
That is one stock in focus ahead of the results. But one stock just suddenly shot up, Nuresh, is PB Fintech. Pull up the intraday chart of PB Fintech. Almost 3% higher now, almost went to 5% at one point in time. Yes, look at that. So PB Fintech is in focus because there is a news report, as in fact it's a fact, that from 1st of April onwards, health insurance will be applicable on all senior citizens. Earlier, there was a cap on age. Now age limit is gone. So the sense is that possibly volumes for companies such as PB Fintech will go higher. But we'll talk charts right now at 12.28 odd. Nuresh, how does this one look?
At current levels, the risk reward is no more great. The stock was a buy at 650, 700. The reason being, if you look at the listing date, the stock had made a trading range of 1300 to 1400, 1450. And what we see is when stocks, after falling 50%, 60% from the top, come back to the same IPO prices, tend to spend some more time over that. In the previous spike a few days back, the stock went to 1350, 1400 and dropped all the way to sub 1200 levels. So for now, very similar structure we've seen in a lot of new age companies. So some bit of timing to be spent here at 1200 to 1400. So I would wait it out. It's a hold, not a buy at a current level.
Take coming in on PV FinTech. In the meantime, let's just take stock of what else is happening. Look at Idea. Although it started off the day very well and you saw a smart follow through from yesterday when the FPO closed, today Idea is quite a drag. It's a 9% downtick that you're seeing on the stock. I think it's in F&O band today as well, if I'm not mistaken. Yes, it sure is. 1310 is where that stock is. Kunal, wild gyrations on the stock. What's next?
Yeah, the F&O ban is the only reason why the stock has not seen any follow through, and that happens with many of the stocks. Now, just as a contra example, Biocon today is out of F&O ban or was out of F&O ban yesterday late evening, which means that and that's why you've seen the stock outperforming and bouncing up higher. So I think that's a typical feature for stocks which are in the F&O segment, and that generally hampers the stock price trend over the near term. And that could also mean that potentially, if Idea continues to remain to this F&O ban, the stock may just about linger around this 13 mark, maybe 12, 12 and a half, or I think 11.65. That was the low the stock had hit 2 days back. That could be maybe retested in this leg of downtrend for the stock. And then 14, 14 and a half, which was the level the stock hit yesterday, that could act as a resistance.
Okay, that's the call coming in on Voda Idea. In the meantime, let's also get in some BTST trades going. Naresh, what's on your list?
So first would be a buy on Reliance Industries itself. The stock has come back to the level where risk reward is good. Stop loss at 28.80, target price of 29.50. Second is a buy on NMDC, fresh breakout, new 52-week higher. Stop loss at 243, target price of 254.
Right. Kunal, what about your BTST ideas?
So I'll go with first one, a buy on IEX. That's a stock which is heading towards a breakout above 153 mark. It's a very classical inverted head and shoulder pattern for the stock. So would suggest a buy with a target of 175. Stop loss could be kept at 145. And second would be a buy on Dixon. That's a stock which is coming back towards a breakout mode. We highlighted this at 7,650 levels for the stock price. It's crossed the 8,000 mark today. So would suggest a buy with 8,500 as a revised target. Stop loss at 7,800.
Okay. Just want to see what a Tejas Networks as well is up to. Remember, the stock has already clocked in a good 40% in just the last two trading sessions. A, in the run-up to the earnings, and then B, post-reacting to its earnings. But today is not really seeing a, smart follow-through. Very strong earnings, led, of course, by BSNL's 4G project execution. I don't know if you have the management bite, because we did speak with the management as well. In fact, first, let's listen into that, and then we'll bring on board Devang on this.
We normally don't give guidance on margins, but we'll always strive to build better products, cheaper, and manage our expenses. Yeah, and that's going to be the focus of the company.
We see a good pipeline of business opportunities coming in the coming year. In India, of course, there are a lot of 5G upgrade opportunities which are there, as well as the expansion, the investments in terms of broadband, in terms of upgrading the backbone capacity of the private operators as they expand their broadband services and the 5G networks. So those are all great opportunities for us in India. Then there is BharatNet, which is again a very strong opportunity where we have very relevant products. That is just in India, but internationally there is a lot of focus in growing our business, and similar kind of opportunities of products where we leverage the broadband expansion that is happening in US, Europe, as well as the 4G, 5G developments which are peaking in a lot of the emerging markets across the world. So those are all great opportunities for us, which we want to leverage fully during this current financial year.
Yeah, so look, we don't normally give guidance, so I can't give you a number, but all you can expect is that we will continue to execute flawlessly. The supply chain is managed extremely well, under good control. And then we have a healthy order book, so you can expect us to execute to that order book and add more to the kitty as we go.
In fact, not just Tejas Network, but we also spoke with the managements of transformers and rectifiers as well as Bajaj Auto to hear out what they told us about where the future growth for the companies is going to come in from.
We intend to put up a facility for the fabrication of the transformer tanks, which are in shortage worldwide. It's not only in India, but throughout the world, people are facing the problem. The prices have jumped by almost 50 to 80%. We are putting up one automatic line for manufacturing, which will increase our capacity from 250 tons to something like 700 tons. And after establishing that and after maturing there, we'll put up another line within another 6 months. For this, we don't want to rely on the bank. We will infuse more equity in the company so that, we become almost debt-free. That's what our intentions are. The majority of the growth will come from the renewable. And we are now, trying to get into that business in a big way.
Domestic market is turning in a nice growth. We expect the markets to be growing at about 7 to 8% in the coming year, with the upper half of the industry growing at perhaps 2-3% points more, and the bottom half growing at 2-3% points less than the average of 7 to 8. Is some new markets and new segments which we are entering. Brazil is going to get unlocked with the local plant coming on stream in June. And, we are expanding our footprint in Europe next month. I would say that FY25 can be expected to be better than FY24 in exports.
Okay, let's begin winding up for the day then. Devang, we let you go on that note. Kunal, Naresh, good having you in the show as always. Heineken, and look what kind of an impact it's having on the stock UBL. That's closing in at the session highs. It's up, I think, over 9% now as we speak. Heineken has said that its India business, that's UBL, has seen a 20% year-on-year growth in the Jan to March quarter, and that's clearly rubbing off on that stock. Okay, I stand corrected, not just 9%, but it's a mammoth 10% move that you're seeing on UBL in today's trading session. Having said that, for the index, it's been much of a quiet day, even though we did have global support come by today, and even Europe has started off on a decent note, but you can't see much of that enthusiasm rub off on the index. It's pretty sedate. 22,405 is where we're shutting shop for the day. Tata Consumer, of course, has seen disappointing a move after its earnings, so that closed in lower by 5.25%. Technology, of course, has had another down day. There's TechM, which is slated to come out with its numbers tomorrow. That's going weak into its numbers, 1% lower there. Infi, TCS have been the other laggards. Reliance pushed lower by about 5%, or rather 0.5%, I beg your pardon. Bharti as well was in the red in today's trading session. But on the flip side, it was metals which has been the strongest show today. So be it SAIL, NMDC, JSW Steel, Tata Steel, they've all powered ahead, along with, of course, Hindalco very, very smartly in trade. Axis Bank is due to report its numbers today. Let's see where it goes home then. Holding strong by about almost 1% for Axis Bank. And Cipla, after that Investec upgrade as well, has been a very smart performer. Almost a 4% notch up on that stock as well, touching that 1,400 rupee per share mark. That's pretty much it on this edition of Closing Trades. Thanks for watching.
If you like this video, then like, share and subscribe to ET Now.